You were listening to chartingwealth.com for Thursday, the 5th of July, 2018. Of course, the market is closed on the 4th, and we had a short trading day as we are recording this program on July the 3rd. We want to encourage you, if you've not already purchased our book, Charting Your Way to Wealth, we sent out another big bundle today. We're in our third printing of the book. You understand what it is we do here and help monetize the site for all the time and energy that we put in and money that we pour into this endeavor, this love. I enjoy doing this with you every day and so hope that you find it helpful. There's so many scams out there on the internet, people trying to get you to spend thousands of dollars for some way they're going to teach you how to make millions in the market with one class. And I'm the first to tell you that is bunk. If you want to learn how to trade, it's going to take you disciplining yourself and practicing day in and day out for many months or years in order to get good at doing this. And the methods that we've developed, two primary methods of trend following, is one way to do it, to learn how to trade the market, to do virtual trades, to practice and to get good at this. And even as you're getting good, if indeed you do decide to start doing real trades, you need to continue to practice and hone your skills. Again, it's like learning how to be a bow hunter, learning how to play the piano, learning anything of value. You have to hone that skill set. You have to get better and better at it. And anyone who tells you, do you believe anybody could teach you magically overnight how to play the piano? Then why the hell do you think anybody can teach you magically overnight how to make millions in the stock market? If it were that easy, don't you think everybody would be doing it? Well, they're not, because it's not easy. It takes a lot of hard work and determination. And our book can help get you started and following us every single day. Besides the book, of course, we have our Stock Traders Journal, and we want you to purchase that also if you so desire, or we download every day to the folks who get our emails. It's also on the YouTube channel and at the website. There are links every single day to our daily market worksheet, our weekly market worksheet, and our trade worksheet. We just put them all together in the Traders Journal. It's all available for you for free. Just about everything we do here is for free. The book is not for free because it cost us money to write it and to print it, to spiral bound it, which is a whole hell of a lot more expensive than putting into some paperback version. And again, we're very proud of it. You will like it. And don't forget, all of you who purchase it up to the 15th of July, guess what you will be getting? We're doing a special short chart trading training for all of the purchasers of our book. If you want to get on that list, buy it. If you've already bought the book, you're on that list. And we will be sending out a special training on how to use the 2-hour chart to help you locate short chart trades to practice. Remember, we're not a stock calling service. We're not giving you investment advice, but we are giving you education and hoping that you practice and get good at this. And then when you do, you can make up your own mind when to spend your own money or put it at risk in the marketplace in order to start being a real trader or investor. Now, those of you who've been listening for a while and were already signed up for the daily market review, of course, you received yesterday and over the weekend your link to the special training that we put together on the quarterly chart. Hope that you enjoyed that. Would appreciate your feedback. Enough of all the harping and the encouraging. Let's jump into the market again. A shortened trading day. You can see our chart only goes to 1 o'clock. Markets shut down early. Of course, things closed on Wednesday the 4th, so we will be, of course, coming back to you on Thursday the 5th when the markets open back up again. But let's cover what happened on Tuesday the 3rd and sort of what that sets us up for going into the market with the new day. So let's look. The S&P 500 down 0.35%. We first want to jump, of course, into the weekly chart, not the 4-hour chart. We see that so far we seem to be going into a down week. We appear to have a weekly vertical crossover going down forming. Of course, it's not going to be completed until the market closes on Friday. and then and only then would we call it as a weekly vertical crossover going down. For now, it's still in a confirmed up move. Derivative oscillator losing momentum. Price percent oscillator, like we said, looks like it's getting close to crossing over going down. We see the derivative oscillator on the 2-day chart continuing to move down. Price percent oscillator heading down. And again, we have stair steps moving down. Price movement below the 2-day trend line. Of course, breached the weekly trend line all the way back on the 2-day candle ending Thursday, the 21st of June. So we've got 8 days of down movement underway since that breach. And we just continue to see the market move down. The candles have gotten smaller over the last 6 days. So that's interesting. We now have pretty much a spinning top. It means, things are still moving down, but some indecision. And we see things maybe bottoming somewhere around the 270.50 mark. So we'll pay attention to that and see if that really holds up. What's going on the 4-hour chart? We can really see the sideways slide. As I was talking about things possibly bottoming, we saw a crossover in the morning on Tuesday. Had an up movement crossing over, going up. Derivative oscillator was gaining momentum till the afternoon, but again, the afternoon candle is supposed to be 4 hours. It's really only about an hour since the market closed early, but we did see a bit of a pullback there at the end of the day. Price movement still below that 2-day trend line. Let's continue to watch and see how things shape up on Thursday when the markets get going again. Okay, back to the weekly chart, and we go to the Qs. That's the NASDAQ 100, down much bigger than the 0.35% for the S&P 500. The NASDAQ 100 down 1.16%. Again, getting closer to crossing over. Again, isn't showing a crossover yet on the price percent oscillator, derivative oscillator losing momentum. Again, we have a down candle forming for the week. Hasn't formed completely because the week's not over. Had the 2-day crossover going down back on the 25th. And again, this latest 2-day candle is actually a green solid box up candle. So again, not as strong as the green open box candles, but is showing some potential slowing as far as the Heikin Ashi goes. Derivative oscillator is not really showing that. It's gaining downward momentum. So is the price percent oscillator. So we'll continue to watch things. What does the 4-hour chart show us? Well, the 4-hour chart had crossed over going up in the morning and then trying to cross back over going down in the afternoon. Really, again, a sideways slide. We see their price movement is below that 2-day trend line. So nothing to tell us except sort of a sideways slide as the market's really heading into the holiday. Nobody wanting to get too serious on Tuesday before the 4th of July. What do we see on bonds? Bonds up 0.54%. Remember, we had that weekly vertical crossover going up back on the weekly chart ending the 25th of May. And then, of course, the following week, we had a big up week. Then the market sideways for 2 weeks. And then for the last going on 3 weeks, up movement looking quite nice. Derivative oscillator stair stepping up. Price percent oscillator heading up on the weekly chart. The 2-day chart, what do we see? Well, again, it was up for the prior 2 2-day candles, but the latest ending on the 3rd of July is really sort of a red spinning top. It's a little bit bigger than a top because it doesn't have long legs on either side, long wicks on either side, but it does show significant slowing in that up movement. Derivative oscillator heading up, price percent oscillator heading up. And again, price movement is above the weekly and the 2-day. Let's take a look at what that 4-hour is showing us. 4-hour had really sort of peaked out, started moving down on Monday morning and Monday afternoon, and then tried to gain some momentum going back up on Tuesday. Not enough to rotate back over going up on that 4-hour chart. So we'll wait and see. And again, if it does cross over going back up, then you might look to jump in. Do look and pay attention to the derivative oscillator still in the negative, price percent oscillator in the negative too. So if both of them switch over and there's some strong up moves, you still might have some legs, continued legs in bonds going up. We'll wait and see what we see on Thursday. Lastly, we go into gold. Gold up decently for the day, 1.01%. Now, gold, of course, is in a multi-week down move. The last 3 weeks in particular, or going on 3 weeks, down strongly. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. We look at the 2-day chart, and again, nice stair steps going down. I mean, look at as far as looking at the trend line, heading down quite precipitously. Derivative oscillator, the last 2 days not heading down at the same momentum, but still gaining a little bit of downward momentum. Price percent oscillator heading down. We look at the 4-hour chart. What do we see? Well, it bounced off and appears to have, well, it moved up in the morning and the afternoon on Tuesday. Derivative oscillator, gaining some strong upward momentum, and the price percent oscillator popping around quite nicely. So again, keep watching this 4-hour chart. It has been doing better as of late. Not super beautiful, but better. And again, we love it when this 4-hour chart works as a total trading chart. It's had a few missteps here over the last few months, not like it was in the prior 2 years, and we could count on it, seemed like week in and week out, but for about mid-December to mid-January, and did not start this year off so well. But let's keep our eye on the 4-hour chart and see how it does guide us. Remember, the weekly and the 2-day are both in confirmed down moves. So as far as our standard practice goes, there's not a trade there. Now, could be a pullback, and if it rotates back over going down, could give you a jumping in point into gold. So keep an eye on things. Folks, that's where we are. We wish you and your family a wonderful Independence Day, 4th of July celebration. Be back with us on Thursday. Don't forget, we are starting to travel on Friday through most of next week. We're going to be out in the mountains in Colorado, Utah, and Arizona, and it is going to be difficult to bring all of our broadcasts. I am thinking we're going to try our best to make that happen. We'll keep you posted. We don't take too many vacations. We're away from everything. Sometimes, as you know, we've been on cruises out in the Mediterranean. It's been difficult, but we'll try to do our best for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.